This week on Sylvia's Traders Lounge.
Anytime we're overly frightened and anytime we're overly confident or anytime we're overly anxious, our logical reasoning centers shut down and our behavior defaults to what we call natural human cognitive biases. And when we are in that state, our behavior becomes extremely easy to predict and therefore extremely easy to take advantage of. But these biases are why we do things that we previously say that we were never going to do. It's why we do things like breaking our trading plans and jump trading strategies if we lose, or jump trading strategies if we see something that looks better. It's why we jump at trades that are too large in size, why we stay in trades past the time we said we're going to exit. It promotes all the things that lead to these really excessive losses in the marketplace.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Our guest is John Locke. Second time on the Trading Lounge. We're grateful to have you, and our theme is discovering why and how your trading expectations affect your trading. Since establishing Locke in Your Success LLC in 2006, John Locke has emerged as a leader in the trading industry. He has authored more than a dozen options trading strategy courses and created many career-changing trading performance programs which are used by traders around the globe. To support his students, a trading community was developed where hundreds of talented traders share ideas, have access to educational resources, attend live and recorded webinars. In his pursuit to become an expert in the study of human behavior and trading performance, John Locke has achieved multiple master certifications in transformational coaching, neuro-linguistic programming, and hypnosis, and is deeply involved in many other self-improvement sciences. He uses these skills to help traders conquer fears, overcome anxiety, and break through the barriers holding them back from performing their best. Welcome, John.
Hey, thank you for having me on, and welcome everybody.
Yes, and maybe you can tell us, given your background from your trading bio, how you found your passion into helping traders become better versions of themselves and in managing fear and anxiety that can cripple their trading progress.
Well, I found out early in my career that the professionals that we're trading against in the marketplace feed off of what I call a heightened state of awareness or heightened emotional arousal states. And they can do this because anytime we're overly frightened and anytime we're overly confident or anytime we're overly anxious, our logical reasoning centers shut down and our behavior defaults to what we call natural human cognitive biases. And when we are in that state, our behavior becomes extremely easy to predict and therefore extremely easy to take advantage of. But these biases are why we do things that we previously say that we were never going to do. It's why we do things like breaking our trading plans and jump trading strategies if we lose, or jump trading strategies if we see something that looks better. It's why we jump at trades that are too large in size, why we stay in trades past the time we said we're going to exit. It promotes all the things that lead to these really excessive losses in the marketplace, meaning that you're not going to make money for any substantial length of time if that's the way you're doing things, regardless of the strategy you use, regardless of how much you know, because when you're in an elevated state of arousal, you're not following the strategy and you're not utilizing what you know. This being the case, learning to utilize your emotions properly in ways that are beneficial rather than in ways that are destructive is every bit as important as any indicator or strategy you might ever see. Unfortunately, very few people aggressively work on their emotions directly. Instead of learning how to properly process emotions, and the emotions mainly that you need to process are the emotions that revolve around uncertainty. If you don't properly process those emotions, the uncertainty is going to be forever a problem in your trading, right? And because people can't deal with this uncertainty, they're doing things like relying on indicators or form-fitted back tests, or relying on other people and looking at least recent luck-driven results that have absolutely nothing to do with whether or not you traded well. And they're using that to do that, and that doesn't have anything to do with whether a strategy is actually any good or not. The bottom line is avoiding uncertainty because we're afraid and anxious puts us into what we call a failure loop. And the only way to escape the loop is to learn how to properly process your fear and anxiety so that we can deal with the reality of the uncertainty that is always going to be present in trading. Now, this is critically important to be able to deal with this properly, and it's hardly ever discussed, which is why I'm so passionate about it. Okay, so that's basically my answer.
All right, and then how can we as traders manage our expectations, and then that, you know, in a way that we can be able to become long-term traders?
How can they subconsciously manage their expectations? All right, so consider this. Your conscious mind is capable of processing about 2,000 bits of information at any given second, about 2,000 bits of information per second. Your unconscious mind processes approximately 4 billion bits of information per second. That's 2,000 for the conscious mind, 4 billion for the unconscious mind. By the time you're consciously aware of anything, your unconscious has already observed it, processed it, applied a meaning to it, and created an emotion. Meaning you don't manage your subconscious. Your subconscious manages you. Now, that doesn't mean we can't become better traders or we can't do anything about it, because although we may not be able to manage the subconscious, what we can do is we can train our subconscious to process information differently through things such as mental rehearsal and coaching, NLP, guided meditation, hypnosis, those types of things. We can train our subconscious to react in a way that we want it to react. Now, something we should all realize is that the only natural fears that we have when we're born as children are the fear of loud noises and the fear of failing. Every other fear, every other thing that makes you anxious, you've learned. My point being that virtually everything you fear or everything you're anxious about or happy about or sad about, the reason you feel that way about it is because you learned how to feel about them. Then you trained your unconscious mind, or somebody else trained your unconscious mind to look at things that way. But since it was learned, it can be unlearned. And the ways to do that, unfortunately, nobody teaches us how to do that. No one teaches this stuff in school, which is why I'm here, right? So this is what we do.
All right, and then you did mention neuro-linguistic programming, which you're certified in. Maybe you can tell us more about that and how that ties into a trader's mindset.
Yeah. So we can make tremendous changes in a trader's mindset with NLP and hypnotic techniques. But just like fire, NLP can be, and hypnosis, they can create wonderful things, and they can also be used to destroy things. So realize that hypnosis involves being in what we call a trance state. And a trance state is when our conscious mind isn't paying attention, or when our conscious mind is focused on something other than what we're doing, which, by the way, is most of the time. So most of the time, we as human beings, we're operating unconsciously, meaning that we're in a trance state much of the time. And when we talk about NLP, NLP involves the way we organize information and how we place it in areas where we understand, or our mind knows what that information needs. And we want to do that because we need to place meaning on future events. We need to place meaning on future information that we see. My question I have is, you're in, or my statement and a question is, you're in a trance all the time. You're utilizing NLP all the time. So are you putting yourself in trances of empowerment, or are you putting yourself in trances of disempowerment? Are you organizing information in a way that's beneficial to you, or are you organizing information in a way that's destructive? And the answer for most people is they don't know. They don't know because they think their thoughts and emotions are something that happens to them. They believe that their thoughts and their emotions are true, rather than realizing that thoughts and emotions are self-created, made-up fantasies, and they're not necessarily very good made-up fantasies. If you're having problems with reaching your goals because you've been in a disempowering trances and you've organized information in a way that doesn't benefit you, then what we can do is we can go through the natural process of NLP and hypnosis with you to help you organize your unconscious information and the meanings you apply to things in ways that will help you move forward towards your goals and live a better life. And as far as our NLP and hypnosis tied to, what was the question, tied to expectations that affect a trader's performance, the answer is absolutely. Unconscious expectations were created for most people through random things they heard and experienced, which were never challenged at the conscious or logical level. In other words, we're all, or people are in a trance when information slips in and it never logically ever gets challenged, meaning the expectation that you have, the expectations you have, whatever they are, may have absolutely no basis in reality. And if your expectation has no basis in reality, it creates a cascade of problems when we attempt to reach those expectations. Realize that we can expect anything, but reality is a different story. And reality wins every time. So that's how that affects you.
Wow, that is quite deep. Thank you for that.
You're welcome.
So there's a statement here by Viktor Frankl, and he says, between stimulus and response, there is a space. In that space is our power to choose our response, and in our response lies our growth and our freedom. What do you think about that statement? Do you agree with it? If yes, why?
The statement's almost perfect. Our unconscious always reacts first, but if we are on the lookout for that reaction, then we are able to interrupt that reaction and we can take a more beneficial action. And when we can do that, we can do pretty much anything. And we'll talk about where that space actually is in your thought process as we go along within the presentation.
All right, I think you can take us through your presentation and we're ready to learn from you.
Awesome, let me see if I can share my screen here.
Okay.
All right, are we good?
Yep.
Nice, okay. So today I was going to talk about how and why your expectations affect your trading results. And I'm going to go about it at a kind of a roundabout way. And I have a question for you. What do you truly desire? This question comes out of a show that my wife and I watch here in the US called Lucifer, and Lucifer is the devil. And Lucifer has the power to put somebody essentially in a trance when he asks this question and get their real unconscious desires. And what they find is, or what he finds is that their unconscious desires are very, very different than what they think, what the person thinks their desires are. But he goes right into what they truly desire. And this is true for all of us. What we truly desire, we often don't consciously know, or we don't consciously understand. When we come and we talk about trading, what is it that most people truly desire? They truly desire, or possibly not everybody necessarily, but most people truly desire it to be easy. They think I should be able to learn without years of study. I should be able to learn without a substantial investment of time and money. I should be able to do it myself. I should be able to learn on my own without multiple setbacks, without failures. All I need to do is find the right strategy, the right trading indicator to be profitable. And once I find that, I'm going to be profitable forever for now and forever into the future. They believe they're going to be consistent. They believe they should be able to win every trade. They believe their feedback. They believe that if they traded well, they won, or if they won, they traded well. They believe if they lost, they traded poorly. They believe that they should feel confident or certain. I should allow myself to feel confident, and with that confidence and certainty, they often have, I should allow myself to feel confident if I win. I should force myself to feel uncertain and lack of confidence if I lose. That's what they often think. And when we take a look at any one of these statements, like I should be able to win every time, when I coach people and I talk to people about that, what happens is I say, what do you think about your results? Because they'll come to me and they'll say, well, I want consistent results. And I will say, oh, you mean you want to win every trade? Because that's what the definition of consistency is, right? The same thing every single time. And they'll say, well, no. I don't expect to win every trade. I expect to lose trades. And I say, oh, really? Realize that when we talk to somebody as a NLP person or as a hypnosis person or any kind of a therapist or coaching, we don't believe what people say. People will come to us with a presenting problem, but that presenting problem is 99% of the time a lie. Not that the person's lying to me because they believe it's true. They're lying to themselves. Therefore, we don't consider what people say so much as what they do, because what they do is the truth. And my question to them is, really, you expect to lose trades? What do you do when you lose a trade? How do you feel when you lose a trade? If these people are coming, or my client comes to me, and I find out they lose a trade and they drop their trading size to nothing, or they lose a couple trades and they're hopping to a different trading strategy. Basically, they lose a couple trades and their process just goes off the rails. If that's what's happening, they expect to win every trade. Because if they expected to lose a trade, they wouldn't be trading too large. They wouldn't be hopping strategies if they lose a trade. There's a whole host of things they wouldn't be doing if they truly expected to win every trade. So when you're evaluating yourself, what I'd like to encourage you to do is to take a look at your feelings and your actions when these things happen, and actually challenge what you believe you actually desire, or what you believe your expectation actually is with trading. Now, here's a question for everybody. What are the most important things you need to learn to focus on to be a successful trader? Is it finding the right indicator? Is it finding the right trading strategy? Is it finding the right service to follow? If I could only find the right indicator, I can only find the right strategy, I can only find the right service, I'm going to be successful as a trader. None of these things are important with trading. It's what everybody focuses on, it's what everybody's trying to do, but none of them are important. The most important things you need to learn as a trader and focus on to be successful as a trader are, one is training yourself to make good risk-reward probability decisions. There's a problem with that though. Risk? I don't want any risk. I don't expect risk. Oh, but if I ask people, they'll say, oh yeah, well, I understand there's risk, but do they really expect that risk? Do they really internalize that the risk is there? And the answer is most of the time not. Most of the time not. They don't want the risk. They don't expect the risk at an unconscious level. Probability? What do you mean probability? I want to win every trade. I expect to win every trade. Again, logically, they understand that that is not possible, but at an unconscious level, the majority of people are expecting to win. They want to be certain they're going to win every trade. The second thing that's one of the most important things is training yourself to properly interpret and learn from results. There's a problem with trying to properly learn from results with trading, and that is that most people, or all of us, our natural tendency is to try something, and if we get the desired result, we think we did the right thing. If we get an undesired result, we think we did the wrong thing and we want to try something else. This is the natural learning process of a human being. The problem is it doesn't work that way in trading. I could be completely irresponsible, follow no plan, do something completely stupid. I could look at my S&P 500 futures. I could take every penny in my trading account and I could put that into a trade with going in with no rules, and I could have a wonderful result. Or I could also go in and I could follow a very carefully detailed plan using my indicators to get in, have a nice risk reward profit target, get out when I hit my stop. I could trade perfectly and flawlessly, and I could lose the trade. If you expect your results to match your performance as a trader, that's a problem, because your results don't match your performance. Your results as a trader in any individual trade is luck driven. Your results over a long period of time are going to match your performance as a trader, but your luck on shorter term time periods do not. They're luck driven. They could, but they don't necessarily. And if we're using this to make our decisions, that's a problem. The other thing is I need instant and decisive feedback. I need to be confident I'm on the right track. And this is the issue with traders. They come in and they'll come in and yeah, they'll do back testing, but we'll talk about this maybe later. It's form-fitted back testing. Of course, you're going to win back testing. Back testing has nothing to do with the future. And they're not confident. And they're using the results or the short-term results for feedback. And they need that instant feedback because they're not confident in themselves. And then they start using that instant feedback and they're getting the wrong messages from that because, again, that feedback is luck driven. And they're using essentially luck to decide what to do next and whether they're doing the right thing or not. And this is going to be a problem. So you need to train yourself to properly interpret and learn from those results and realize that you can get a bad result and trade well. And you can get a good result and trade poorly. And the other thing is being able to adjust to setbacks and conditions changes. People's expectation is, I expect a trade or an indicator that's been profitable in the past to remain profitable for now and forever into the future. That is an expectation that is not good for a trader. You need to expect the market conditions to change and you need to expect to adapt to that. And you want to train yourself how to identify when things do change and when the edge in your strategy, whatever that happens to be, goes away. And you want to understand what to do when that edge goes away. So a big part of being successful long-term as a trader is understanding the edges of a bunch of different types of strategies, understanding when that edge is present in the marketplace, understanding when that edge goes away, and then what to do about it when it does. That's when you're going to be long-term successful. If you're depending on short-term results for confidence, that's a problem. If you're depending on a trading strategy to continue to work into the future, that's a problem. If you're trying to blindly do that, eventually both those are going to go away. And what you really need to do is you really need to understand how to, like I said, identify the things we're talking about and then adapt and change to those conditions. That is the key. Now, I'm often challenged with some of the things I just said, but I've done experiments in the past. I like to do little experiments with my students sometimes. And I've done things such as give 100 people the same rule set and then track their success over a year, 2 years, 3 years. And what we find is that 10% do great, about 30% do terrible, 70% break even. Now, these are strategies that I have developed, and they're strategies that I have a webinar within our membership called Options Trading for Income, where we're real time going over the trades, and I go over the adjustments every week that happened, or the entries, the exits, the adjustments every week that happened in that particular trade. So these are strategies that I know how they did because I sat there and I did them real time over this whole period. And for the most part, strategies come out 80%. They win like 80% of the time, and I know what the results are. But I interview these people who are doing the same thing I'm doing. 10% do great, 30% do terrible, 70% break even. This is pretty consistent among the industry. And then once I do that, I'll give the same people other rule sets. I'll give them a crappy rule set that probably isn't going to do well. I'll give them, different types of rule sets. And when I do that, the really funny thing is the same individuals do well. The same individuals who did terrible do terrible. The same individuals who broke even broke even. So if you take a look at this and you look at the results, I researched, well, first of all, those are the results of that. The other part of the research is evaluating 100 traders I consider to be long-term successful. These are people who are mentors for me, people who are peers maybe, value investors that I know, hedge fund owners that I know, top trading instructors, day traders, students, friends. If you take a look at these people and take a look at people who've been very successful 5, 10 years or more, one of the interesting things is none of these traders use the exact same rule sets. None of them use the exact same indicators. None of them use the exact same strategy. They're all doing different things. So if you think about it, if I give 100 people the same rule set and the results are basically all over the place, and I take 100 long-term successful traders with great results in their trades, their rules with great results, and we look at their rules, and we look at their indicators, we look at what they're doing, and they're all different, what does that mean? Well, we want to find that out. What is it that the successful traders have in common if it's not the indicator, if it's not the rule set? Their expectations tend to be similar. Their attitude towards trading tends to be similar. Their attitudes towards uncertainty, their attitude towards losses, all are similar. Their principles of how they approach the market, they're all similar. Yes, but a rule set, typically no. So they all have an effective method of gauging and acting upon great risk-reward probability decisions. Understand that trading is about risk, reward, and probability. If you are taking on an appropriate amount of risk versus how much you're willing to make, and the probability of that happening is high, you will make money trading. You're going to lose trades. You're going to run through cycles of where you make money and where you have losses. But if you'll always have risk, reward, and probability, if that combination of numbers is always in your favor, you will make money over the long term if you're persistent enough to push through the losses and continue to trade the same size and push through the uncertainty. The other thing is that these traders are willing to risk failure. At an unconscious level, they're completely willing to risk failure. And they have the ability to properly interpret their feedback. And therefore, they have the ability to learn from their result. And when they can do that, when you can properly learn from your results, you can adjust your process. You have to have the ability to lose a trade and then go back and review your trade and say, oh, I did everything right. I did the right thing. I can reward myself. And you also have to have the ability and the habit of reviewing your winning trades. And you have to be able to take a look at a winning trade and say, oh, you know what? I traded this like a complete, idiot. I traded this terribly, even though I won. And identify that so that you can, and when you can do that, you can properly interpret what's going on with your trades. So one of the things that we have in coaching and is we have what's called a thought model. Realize that there's a circumstance that is a fact. There's a thought about that circumstance. The thought creates an emotion. Your actions are always based off of your emotions. I know we haven't talked about this before. People think it's based off logic or whatever, but your actions and non-actions are always based off of emotions. That's the way the human being works. And your action is going to produce a result. When we're going through this model, there's a problem between circumstance and facts. Circumstances and thoughts. Most people believe that their thoughts are true. Their thoughts are not true. You could have a circumstance where you entered a trade. The trade cost you $5,000, and you returned $4,000. Meaning that if you did the math, you now have $1,000 less than you did when you started the trade. I'm often told, well, I lost the trade. If that statement for you is an emotionally charged statement, that's not a circumstance. The circumstance or fact is that you now have $1,000 less than you had before. The thought might be that I lost the money, which creates an emotional charge. That emotional charge is going to create an action or a non-action, and that action or non-action is going to create a result. This is what we use when we coach people. When we get deeper into that, when we start using hypnotherapy, when we start doing NLP work and change work, we want people to actually produce changes in people at a deeper level. We have what we call the extended thought model. The extended thought model goes like this. You have an unconscious belief or expectation. You have a belief of the way I am or you are, and you have a belief of the way the world is, or at least the way that it should be. Then something happens. You have a circumstance, which is your actual experience. What your brain does is it compares your actual experience to the way you believe you are and the world is. It makes that comparison. That comparison creates thoughts, both unconscious and sometimes conscious, about the comparison. Those thoughts create an emotion. The emotion shifts you into what we call a thought map or a thought filter. Realize that when you have a certain emotion as a human being, you delete, distort, generalize, and filter information in a different way. And that information has different meanings to you. And if you're in an intense state of emotion, half of that information completely disappears. So if I'm very angry, my map is going to shift, and I'm going to pay attention to things that reinforce the emotion of anger, that perpetuate the emotion of anger. I will completely ignore or distort any information that opposes that. This process reinforces the emotion until it creates an urge. It's not until this point that you're actually consciously aware of it. All this has happened usually beneath your conscious awareness. All you understand is, hey, I feel a certain way and I have an urge to do something. From there, what we call the rational lying brain gets involved. Your rational mind that lies to you. Your logical mind at that point its first default job is to create a rational story as to why you should take an action on this urge. You do have the chance to interrupt it here. This is the moment between your decision and your action, right? This is the statement that we were talking about earlier with Viktor Frankl. This is the moment between your stimulus and your response. A lot of times, the reason this is in orange is because a lot of times this is completely skipped. For a lot of people who are not aware, they're going to have that urge. They're going to automatically take an action or non-action as a result of that urge. They're going to get their result. This is where you can come in and you can interrupt this process and you can make a different logical decision. Again, being aware that your logical mind, first and foremost, is going to try to create a logical story as to why you should do whatever this urge is. And we can take a look at this with trading, but we can also take a look at it with like dieting, right? You said to yourself, I'm not going to eat cake tonight because I'm on a diet. You come in and you run through this process. The emotion is formed. The filter map is selected. It reinforces the emotion. The urge comes. You get that urge. And then you make a logical justification as to why it's okay to eat the cake. It's okay to just have a little bit, right? And then once you start, you keep going. And this process runs itself and runs itself. Anyway, what you have is you have that action or non-action, you have the result, you have the unconscious interpretation of that result based on your beliefs and expectations, right? So you went through this process, you got a result, and then you say, oh, well, and then your mind says, well, was that the right thing to do? Well, did it reinforce this? If it did, it was the right thing to do. If it didn't, it was the wrong thing to do. And then you can possibly have a conscious interpretation of the result, which is going to, which may change this. When we have a conscious interpretation of a result, we want to reframe the experience to purposely shift the belief if we want to shift the belief. And then from there, we get a belief reinforcement or a deterioration of the belief, okay, depending on our results. So that's what we're going through all the time, all the time, all the time. If you have an unconscious belief that you expect to win all the time, and then you do your trade, and your circumstances, you lost. You compare this. I'm supposed to win all the time. I lost. I have a thought about that, right? I'm supposed to win all the time. I lost. This means I'm a failure. This means this. This means that. It prompts an emotion, or I don't know what I'm doing. It prompts an emotion of maybe fear. That emotion shifts your perceptual filters in a way that reinforces the emotion, creates an urge to do something. Say I'm in a trade, the trade's drawn down. The trade's drawn down. It's not supposed to be drawn down. I'm not supposed to draw down if I'm doing the right thing. I have a thought about that. That creates an emotion of fear. I shift my perceptual filters. Now I'm looking at all the information that tells me I'm going to lose the trade. Something's gone wrong. This is going to continue to happen. My trading plan says to stay in, but I'm feeling all these emotions. I'm feeling this fear. I'm feeling all this stuff going on. And those emotions are being reinforced. Therefore, I have the urge to break my plan and exit the trade. This is where a lot of times we skip the next two sessions. We take the action of exiting the trade. The result is I lost the trade because I got out when, right, maybe the trade came back later or whatever. I lost the trade. The result is the trade was bad, right? My unconscious interpretation was the trade I took was bad. I did something wrong. And then, of course, that believes the reinforcement of the belief that if I did something right, I shouldn't have been drawn down money. And that just runs into this vicious circle where you can never really make anything as a trader, right? You're switching strategies and you're continuing your break plan. Now, we can interrupt that at the conscious awareness level when this happens, and then we can interrupt that, and then we can and then we can logically evaluate how we logically evaluate the fact that, hey, we made a trading plan because we know this is the best probability thing to do, therefore I'm going to stick with that plan. And you can make the decision that's different to stick with the plan. And then of course you have the next hurdle to deal with, which is your unconscious interpretation of that. Because if you stick with your plan and you lose, your unconscious is going to decide you did the wrong thing and reinforce a different belief. If you lose and you interrupt that, you can reframe it and train yourself that that was the right thing to do. And I need to keep doing that even though I lost this time. So this is where the next level comes in. Then of course, if you win, your unconscious interpretation is you did the right thing. Consciously, you may or may not have done the right thing. If you followed your plan, you probably did. So you want to let that belief run through and so forth. So that's essentially how that works. I don't know if you have any questions or anything.
All right, thank you for that detailed presentation.
Yes, that was quite interesting. Thank you for that.
You're welcome.
I can see some questions coming through. I also have one that I'd also like to ask, maybe before I go to the people who've joined in and their questions. Maybe I have one. I'm quite curious about the 10% in your study of the 100 traders, whereby there were about 70 of them who are getting to break even. About 30% of them were losing terribly, and there was 10% that was consistent. Whether you gave them a strategy that was proven to work, or whether you had given them a strategy that you knew was going to fail, they still somehow continued to perform well. Were there other similarities about that group? Maybe something like, were they trading for a living, or was it like an an investment for them, a long-term investment? Were there other metrics maybe to use?
Yeah, so the type of trading we're doing, just for a reference point, is complex options trading, and it's a strategy game, kind of like chess. So there are what we call gray areas in any set of trading rules. So those gray areas are like when you're near an indicator, or you're just past an indicator, or just past an adjustment point. And other things that happen too is your execution. You're going to come in and people are going to get executed at different prices, meaning that if you have a profit target, you're going to be exiting at different points and things like that, right? So during the trading, these people, they're constantly making these decisions of when exactly to get out and when exactly to get in and when exactly to what we call do adjustments. And it's in these gray areas that people do well. So for example, our strategies, for the most part, they win 80% of the time if you back test them, okay? But the reality is there's a certain percentage of trades, what we call slam dunk winners. We'll have 60% of trades that if you follow the rules even loosely, you're going to win. You could have made a lot of different decisions along the way. And then they have these, maybe 10 or 20% of the trades that are just slam dunk losers. You do anything within the rule set, the trade's going to lose. And then there's this wide range of trades where we ran across gray areas. And if you made different decisions at those points, you may have won or you may have lost the trade. And that's the difference between the winning and losing traders, because the traders who are losing that percentage of trades, even though they're technically following the rules, or at least in their mind they're following the rules, a lot of times they'll vary from the rules or they'll break the rules. So a certain percentage of traders, even though I gave them the rules, are going to break the rules. In other words, they're not doing the same thing. And you can even see this with trade alerts. I've seen people who do trade alerts, and the trade alerts win perfectly fine and they lose, right? They're making different decisions. I'm sure you've probably seen this with people as well, or maybe you've experienced it yourself. And it's in these decision points and the way people are reacting to them where they're ultimately going to win or lose. And the other huge thing is position sizing. What you'll see is people will do this. They're not confident in the strategy, so they start out very small position sized. They use short-term results, which are luck-driven, to decide whether or not they should be confident. If they win, they crank their size up, especially if they win 4, 5, 6, 7, 8, 9, 10 trades. Their size is huge, okay? And then they lose the trade on a very large capital size, and then they drop their size back down again. Meaning that the person who came in, started trading large and continued to trade large, or even the same size, won money over that period of time. The person who's fluctuating their position size with their results that are luck driven, they've lost money. Can you see how that happens?
Yes.
Right? Because they get it to this really huge size, they lose money, they drop down, and then they're trading a small size again. It takes them forever to make the money back, or they'll never make the money back. And they just run through that process over and over and over again, sometimes with the same strategy, sometimes through different strategies. They're just never going to make money.
Thank you. I think that now makes a whole lot more sense.
Yeah.
Clearly.
Because there's a lot of things going on in the background that people don't even consider, right?
Yes.
Yeah.
And I've also seen that difference in results, even in trading groups, where you're all taking the same trade, but the results are different. Everyone has a different result based on how they were managing the trade.
And you're like, how can that happen? But it happens.
Yes, it's true.
Yeah.
All right, so I'll also take in some questions. So anyone who's joined in today, kindly put your questions in the Q&A area, and our guest, Mr. Locke, will answer. So there's Albert S. has asked a question. How do you use hypnosis to calm the mind?
Okay, so yeah, one of the things that you have to, well, first of all, we can talk about hypnosis, we can talk about meditation. They're essentially very similar, right? So you have guided meditation, you can do hypnosis and stuff like that. But part of that is understanding that your emotions are not you. So people believe their emotions. They think that they're real, and we want to be able to separate from our emotions, and we can accomplish that through hypnosis. We can accomplish it through meditation, but part of that is noticing just where you sit there and you notice thoughts come into your head, and then you just disassociate from them. Essentially, you let them go, and you let them pass by you, and there's a tremendous power in being able to separate your thoughts from yourself. Again, you are not your thoughts. Your brain is going through all this stuff, but it's not you. You're not your beliefs. You don't have to believe anything. Okay, you have an emotional reaction to something because you have a belief in an expectation that it is not being met. And that belief and expectation has nothing to do with reality. If you talk to 100 different people and you ask them about the exact same subject, you're going to find many different beliefs on that subject, right? You're going to have many different beliefs on what things mean, and you'll have many different beliefs about how the world is supposed to be. And the thing is, we believe that our belief is true, but it's not true. And being able to understand that and disassociate from it, and being open to saying that our expectations, our beliefs around the world are not reality, and understanding that and being open to other people's interpretations of beliefs and so forth is a big part of that. So realize you're upset because your belief or expectation isn't being met. And a lot of times it goes with just being able to break free from that belief or expectation, being able to separate from it and consider other types of things. Does that make sense? And then we can accomplish that with hypnosis. We can literally change your beliefs and values and so forth. Realize that the beliefs that you have, who decided what those beliefs are? Chances are it wasn't you. Chances are those were things that were put into your mind through random people who happened to raise you, random people you met through your life, random experiences you have that you applied a meaning to. That's what the unconscious mind does. You have to remember, you had no rational reasoning filters in your brain until you were 5 to 7 years old, meaning that everything you experienced, everything that was told to you simply went in. You simply believed that to be true. You simply believed that to be the way of the world. It wasn't until you were about 7 years old where you were even able to begin to start to rationalize things and decide whether they're true or not. The problem is that you're rationalizing things based on the information that's already in there. Therefore, you don't believe what's true, you believe what's familiar.
Yeah.
And you build on the fact that it's familiar. And that familiar may have no basis in reality, but you're making rational decisions off of false information, which is pretty interesting, right?
Yeah, that means that you pretty much have to question already what you believe and put it to the test, which I think most people tend not to want to do, to question their own reality. But
Well, the thing is, does it really even matter if it's true? What really matters is what I believe beneficial to what I'm trying to accomplish? Or is it not beneficial? If what you believe is not beneficial, it doesn't matter if it's true or not, because most of the stuff isn't true, or a lot of the stuff you think is true can be interpreted a different way where it's not true, right? So the question becomes, is what I believe and think providing me with the emotions that I need to take the actions that I need to take that are going to give me the result that I want? If the answer is no, then you need to look into changing your beliefs, changing your expectations around trading. If the answer is yes, then reinforce them.
All right, that makes sense. There's a question from Patrick. He's saying that he's been trading on a demo for some time, and you'd want to transition into live. And so he's saying that he's been trying to tune his mind to a live environment, and he seems to be having a problem. So what should he do?
He should do it anyway. So here's the thing. Why do we have trouble jumping into a live environment? Lack of confidence, which you're not going to get until you've traded a live environment. Fear of loss, which you're going to lose. So you need to work with your mind and say, you know what? Let's just take a certain amount of money that I'm willing to completely lose and start getting some experience. You got to get in there and get their experience. What people do is they stay in simulation forever until they convince themselves that they finally found the strategy where they're never going to lose, right? They have an unconscious expectation that they're not going to lose if they trade well. If they know enough information, they're not going to lose. But the reality is you are going to lose. That's part of trading. It's part of the game. And you have to get used to those losses. Therefore, just say, you know what? I don't have to be perfect. It doesn't, you're placing a meaning on a loss that it's some crazy meaning on a loss where it's this terrible, awful thing instead of seeing it as a normal circumstance, right? I can read books all day long about how to ride a unicycle. But the reality is I'm never going to be able to ride a unicycle unless I get on a unicycle and I fall like 100 times. No matter how much I read, no matter how much I do it, if it's simulated on a computer or whatever. I got to get on there. I have to fall. I have to get my scrapes and bruises. It's simply what you have to do, right? So you gotta man up and do it. and it's okay to lose. It's normal. I can tell you that any successful traders lost more times than you can imagine. So it's just part of the process.
Yes, and it seems to be something that's quite consistent, that you never fully know how to trade up and until you get to a live environment.
You'll never fully know how to trade even after you've traded 10 years in a live environment, because things are always changing. Things are always new. You're always going to experience a loss. It's a continual learning process for as long as you trade, for the rest of your life. You're always going to have uncertainty. You have to get over that uncertainty. You're always going to have the possibility of losses. It's just part of the deal. If you want to play the game, that's the game. That's the game, and we have to be able to recognize this, right? So again, that gets back to the expectation that you're supposed to win all the time, and that if you're good and the expectation that if you lose, you're a failure, right? Or the belief that if you lose, you're a failure. That's not true. It's not benefiting you. So that's my thought on that.
Okay, so there's an anonymous attendee, and he or she is saying, how can one reconcile bias and consciousness, especially when you're a beginner trader with an inexperienced strategy and possibly trading on the fear of losing? How do you mitigate this and follow a consistent strategy?
So the beginning of that question was what?
He or she is saying, how do you reconcile bias and I guess not consciousness, but maybe reality? What you're biased towards and what the reality is, and how do you mitigate that in following a rational strategy, especially if maybe you fear a lot about losing? So how do you overcome that? Okay,
so first of all, with the strategy, what you want to do is you want to understand a couple of things. Number one is, why does that strategy work? What edge is present in that strategy? Why is it working in the marketplace? What's the edge present in that strategy? You know, if we have an uptrending market, you can do all sorts of strategies that win if the market goes up. And you can win most of the time because the market's going up and the edge in that strategy is the market's going up. Or the market's trending, the edge in that strategy happens when the market's trending. And we see this with traders all the time, especially swing traders. Hey, I've traded this for 2 years now and I'm making a ton of money, and that means that my strategy's good and I'm going to win forever into the future, and I'm going to be able to go out and trade full time. And I say, well, what are you going to do when your strategy stops working? And they look at me like I have two heads. But it's always worked. And it's like, well, no. You understand that that type of strategy, when you go into a sideways market, loses. You're going to get chopped up. You know what I mean? When the market goes sideways, you're going to be putting trades on, you're going to be stopping out, putting trades on, stopping out over and over and over again. And it's not going to work again until you start trending again. And that's just an example of somebody not understanding, right? They're depending on the strategy rather than understanding the strategy. So it's the same thing here. Your job is to understand the strategy, the edge is, and when that edge goes away, so that you can shift strategies into something that has an edge during the new marketplace, whatever that happens to be in the future. So that's the understanding that you really need in the marketplace in order to trade. So if you have the strategy and you understand the strategy, you understand why it has an edge in the marketplace, then you want to trade it for as long as the edge is present. If you're fearful of trading it, it's probably because you're relying on back testing or form-fitted testing to create a result that's going to win virtually all the time, so that you can emotionally tolerate the strategy. The problem is that that's a form-fitted fictitious strategy, and you can't expect the same results going forward. Okay, so again, we have to go back to the part is that trading is a game of uncertainty. There's no definite way to know which way the market's going to go. You can get lucky, you can get unlucky, meaning the losses are going to be there, and you need to be able to accept those losses without considering yourself a failure, without putting a huge meaning on it. I mean, look, if you don't have the money to have a loss, you shouldn't be trading, number one. Right? If you're trading too large where a loss is going to financially damage you, you shouldn't be trading that size. You need to be trading an appropriate size, and where a loss is not a big deal, because losses are going to happen. And you also have to be able to think about what meaning you're putting on a loss. So one of the things that we do is what's called a thought download, where we will say, okay, I have this fear going into the market. Why do I have the fear? Well, I might lose. So what? What does that mean? You write down what it means. So what? You write down what it means. It's going to, and then you follow it all the way to, you know what the end result is all the time if you fear something? It's death. Right? So I lose a trade. So what? What's the big deal about that? Well, it's not the money. Well, what is it? Well, it means that I'm a failure. So what? It means that I won't be loved. So what? It means that I'm going to be isolated and alone. I'm never going to have any money. Whatever, right? So what? Well, then I die. I might as well be dead, right? So that's what your unconscious is doing. The problem is you don't consciously know it. So you want to go in and you want to challenge all those so whats, right? So I lost a trade. So what? So I lost some money. So what? Failure is a natural process of part of learning. It's a natural part of trading. It's always going to be there. So right. In other words, you're putting meanings on things, or you have beliefs about things, where you have a belief that a loss means all this crazy stuff at an unconscious level, but you're just not aware of it. And we need to bring these things out. And once you do, the fear goes away. Okay.
Thank you.
Yeah.
Thank you. That's a well put out answer. And I think for some it's going to be a bitter pill, but it's a necessary pill that we have to swallow, so that we can at least be able to address this challenge of trading psychology. Because I can see a few other questions were also tied to that question, like Elizabeth, who was asking about is it true that Forex is hard, or why is it that people think that it's hard, especially when they make a few losses? Then there's also someone else who was saying about risk. Trading carries risk. It's not suitable for everyone. What do you have to say about that? Maybe as the last.
Trading carries risk and what?
Trading carries risks. It's not suitable for everyone. What do you have to say about that? Is it a true statement, or is it that everyone can train themselves to become traders, or is it only a certain group of people can become traders?
Trading carries risk. I think that's a true statement. I think look, if somebody in the vast universe of the world can do something, you can do something. You can do anything you want. The only thing holding you back are your beliefs and your expectations around that risk. So can anybody trade? Yes. Can anybody make money trading? And I mean, unless you have some sort of a mental, a real physical problem with your brain, the answer is yes, you can. But in order to do so, you're going to have to change some beliefs that you have that revolve around trading and revolve around losses and what that means. Because we're all we're all different, but we're all the same. We're all human beings. We all have, we all operate in the same way. We all have the same hardware, or at least similar enough where we're all reacting the same way. The only difference is the programming. I can punch poverty into a search engine, and what's the computer going to give me? Right? It's going to give me everything with poverty. It's not going to tell me necessarily how to become rich. It's not going to show me the abundance stuff. And if that's the only information I'm looking at, though, if I'm punching something into the search engine and that's the only information I'm looking at, I think the world's that way. If I punch something else into the search, so if you're putting one thing into the search engine, and I'm putting something else in the search engine, we're going to have completely different beliefs. We're going to have a completely different world. We're going to behave in different ways. And it's the same thing here. If you're having these challenges, if you believe that a loss in trading is a failure and that it means something about you that is this terrible thing, you're not going to be able to trade. You can't trade from a place of failure. You can't trade from a place of scarcity. I talk to traders who want to go out full time about this. I say, you really have to consider this. You've been doing well for a while trading. At some point in your trading career, you're going to take a series of losses. You have to think about how that affects you financially, of course, but you also have to think about how that affects you mentally. Once you go into a scarcity mindset as a trader, it is over. It's over. If you're a full-time trader and you go into a scarcity mindset and you become, and you let the fear and the anxiety get to you, it's done. Because then you start dropping your size, you start shifting your plans to stuff that away from your proven strategies that you know work. And the next thing you know, you're going down the spiral until you're essentially you have to go back to your job. And we need to avoid that at all costs. That is our thing as a trader. We're never going to make money in the scarcity mindset and in the fearful mindset. So you're going to do yourself a great favor to get over that now while you're new and accept those losses than practicing this fear for the next 10 years and making it stronger and stronger.
Thank you for that. So that marks the end of our Q&A session. Maybe I'll hand back to Sylvia.
Yeah, and thank you again, John Locke, for your trading insights today. I'm sure we have learned something new. And maybe as we conclude, you can tell us how people can get in touch with you, how people can find you. I know you're on Twitter, and then we can end the webinar.
Right, so lockeinyoursuccess.com, that's LOCKE inyoursuccess.com is my primary website. You can get in touch with me there. You can also Locke4, LOCKE, the number 4, success is my YouTube channel. So I do a lot of stuff on YouTube. I do trading performance as well as the winning trade, tradingperformance.com, thewinningtrade.com. Any of those will bring you to me, and you can and talk to us there. I believe I'm Locke4 Success also in Twitter. So.
All right. Yeah, we'll be sure to link down the links on the show notes, and we will send you the webinar next week. So thank you so much for your time. We really appreciate. And
that's awesome. I hope you enjoyed it, and thank you for joining us, everybody, and thanks for having me on.
Thank you so much. Cheers. Bye.
Bye-bye.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.